Investing in technology stocks. Hi, I'm Kyle. Maybe you're not sure how to invest your money, but you want a reliable way to grow it. One safe way is with stocks, which I'll tell you about in this video for investors of every level. The technology industry is enormous, including numerous subsectors such as hardware manufacturers, computer programmers, internet service providers, media distribution networks, semiconductor manufacturers, and cloud computing service providers. The technology industry encompasses any business that offers a product or service that relies heavily on technological components. One popular trend in the software industry is the shift toward software as a service, where users pay for access to the software on an ongoing basis rather than purchasing a perpetual license. The software firm receives a steady stream of income as a result. Now, semiconductor chips are the power source for all of that equipment. Companies in the semiconductor industry create the CPUs, the GPUs, the memory chips, and other essential components of modern electronic devices. Tech industries include wireless service providers like telecoms. The cloud computing providers that make it possible for users to easily access high-quality video content are another example of this trend. Top-rated technology shares. Tech companies dominate the list of the world's most valuable corporations. In the final 3 months of the year, investors should think about these dominant and impressive technology stocks. Online retailer and provider of cloud computing infrastructure market leader Amazon.com, NASDAQ AMZN. The departure of founder Jeff Bezos in July marked the beginning of a new era for the industry-leading technology firm. When it comes to computer software, few rival Microsoft, NASDAQ MSFT, maker of the Windows PC operating system and Office productivity suites. Also, after Amazon, Microsoft is the second biggest cloud service provider. The iPhone, the iPad, and the Mac are all products of Apple, NASDAQ AAPL. Apple's ecosystem is compelling because of its devoted customer base and expanding suite of services. One of the largest semiconductor manufacturers is Intel, NASDAQ INTC. Intel creates both general-purpose computer and server central processing units, or CPUs, and specialized chips for areas like artificial intelligence, or AI. The company is placing a significant bet on production with intentions to manufacture chips for third parties. If you're looking for the enterprise networking hardware that supports the entire internet, look no further than Cisco Systems. On the NASDAQ, it's CSCO. To keep its ever-expanding subscriber base interested, Netflix, on the NASDAQ's NFLX, spends billions of dollars annually just on content. More than 2 billion people use Facebook, Instagram, Messenger, and WhatsApp every day, making Facebook, on the NASDAQ FB, the largest social media company in the world. Virtual reality is the company's future, they say. Both Google, NASDAQ GOOG, and Android, NASDAQ GOOGL, can trace their roots back to Alphabet, NASDAQ GOOG, and NASDAQ GOOGL. The FANG stocks, FAANG, are an acronym that stands for Facebook, Amazon, Apple, Netflix, and Alphabet, or Google. These firms are unrivaled in their respective fields, and stock in them has generated outstanding returns in recent years. Effects of chronic obstructive venous infection on technology shares. Now, for the most part, the tech industry has benefited from the epidemic. Despite competition from Walmart on the NICE WMT and Target also on the NICE TGT, Amazon has continued to prosper as consumers shifted heavily toward e-commerce. It is remarkable that Amazon was able to increase its total sales by 27% in the second quarter of 2021, reaching $113.5 billion. The Delta variant uptick could scare away customers from shops again, but growth is slowing. Demand for Microsoft's collaboration software, devices, gaming, and cloud computing services has been boosted by the growing popularity of at-home computing. The PC market continued to perform exceptionally well at the beginning of 2021, which benefited the company in a number of ways. In the most recent quarter, Microsoft saw a 21% increase in revenue and a 47% increase in net income. PC sales have been consistently high since the pandemic began, and the upcoming release of Windows 11 coincides with this trend. It was initially unclear how well sales of Apple's pricey gadgets would fare during the pandemic, but people have been buying them in droves. Everything the company sells saw significant growth in the most recent quarter, with sales of iPhones contributing to a 50% increase in overall sales. New iPhones from Apple, rumored to debut in September, will help the company maintain its current rate of success. Intel has also benefited from the rising demand for electronic gadgets. Sales of laptop computers have increased as more people opt to work from home, but this trend is complicated by a lack of semiconductors worldwide and some distribution problems. Intel plans to significantly increase manufacturing expenditures so that it can establish itself as a dominant player in the foundry market. And in a time of tense relations between the United States and China, the fact that the company is based in the United States works to its advantage. Advanced Micro Devices, a competitor to Intel on the Nasdaq AMD, has also been doing well. Intel's market share is expected to continue to decline as a result of AMD's latest Ryzen 5000 PC chips, which are superior to their Intel counterparts in nearly all respects. Even though Cisco took a hit as customers put off upgrades spending due to the pandemic, the company is doing well again now. Cisco's latest quarterly revenue report shows an 8% increase, and the company expects a prosperous year. With $15 billion in software sales in 2017, Cisco has established itself as a global leader in the software industry. Cisco's video conferencing solution, WebEx, saw a surge in usage as a result of the pandemic, which aided the organization's efforts. As more people stayed indoors due to the pandemic, Netflix's subscriber base exploded. In 2021, growth slowed significantly, however, and the company started losing customers in its primary market in North America. In the aftermath of the pandemic, Netflix will face some tough comparisons. Disney's, on the nice DIS, Disney Plus isn't the only streaming service experiencing rapid expansion. More than double the number of people who were Disney Plus subscribers a year ago are now paying for the service. The completion of the mega deal between HBO owner AT&T on the NYSE T and Discovery on the Nasdaq DISCA will usher in a new formidable rival in the coming year. During the early stages of the pandemic, a significant drop in advertising revenue from hard-hit industries like travel impacted both Facebook and Alphabet, which rely on advertising sales to generate revenue. Facebook's revenue grew by 56% year over year in the second quarter, and Alphabet's by 62%. But antitrust action might be the downfall of these advertising Goliaths. In October of 2020, the United States Department of Justice and 10 state attorney generals filed a lawsuit against Alphabet's Google, accusing it of anti-competitive practices in the online search advertising market. In December of 2020, Facebook was also then sued by the FTC and 46 state attorney generals. Lawsuits claim the social media behemoth bought its way out of competition. The Federal Trade Commission is investigating legal options for compelling Facebook to sell Instagram and WhatsApp. In June, a judge dismissed the FTC's original lawsuit, but in August, the FTC filed a new one. We don't yet know how the pandemic and tightening antitrust scrutiny from the U.S. government have affected the long-term trajectories of these major tech companies. Tips for evaluating tech shares. The price-to-earnings ratio is a helpful metric for evaluating established tech companies with a history of profitability. How highly the market values a company's current earnings can be estimated by dividing the stock price by the earnings per share. A higher multiple indicates that the market is placing a higher value on expectations for future earnings growth. The price-to-earnings ratio is not useful for assessing technology companies because many of them are loss-making. For such young businesses, revenue growth is of utmost importance. The potential for expansion is a crucial factor to consider when betting on the unknown. In addition, it is crucial that the bottom line be trending upward from losses for tech companies that currently have none. It is expected that a company's sales and marketing budget will become more efficient as it expands. Something may be amiss if it is not, or if spending is increasing in relation to revenue. A good technology stock is one that is currently trading at a fair price in light of its expected growth. The challenge lies in making reliable predictions about the company's future growth. Paying a premium for stock can make sense if you anticipate massive earnings growth in the years ahead. The success of your investment, however, depends on your accuracy in assessing the market's future growth. One strategy for reducing risk when purchasing technology stocks is to invest in an ETF that does so exclusively. Please do subscribe and let me know what you thought of the video in the comments down below. I would love to hear from you, and I'll see you at the next one.